This is a Stock Trading Reality Podcast, episode 197.
So if I would normally go in 10 contracts or something, I would go in the next day to try to get the money back. I'd be like 20 contracts, 25 contracts.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. If you're looking for a workout, he recommends the Incline in Colorado, Clay Trader.
Yeah, that is right. I have indeed hiked the Rocky Mountains with members from the community. If you're maybe new to the podcast, we have what we call the Inner Circle subscription service. That's through claytrader.com. And it really is a community. It really is a group that, assuming you participate and want to, there's no obligation. You can just sign up and get the alerts and such if you want. But if you do participate, we really do have a community in all forms of the word. And one minor example of that is that, I've met up with members all over the country now. And one of the more recent examples, met up with people from the Colorado, the Denver area, and we did some hiking in the Rocky Mountains together. And there's actually a couple of vlogs of it on the YouTube channel if you're curious. If not, but yeah, I have, and it's always weird. It still is weird because none of this was planned. Did I ever think that, the chat room would be successful? Sure. I mean, you're not going to do something unless you think it's going to be successful. But did I think it would go to this length where now I'm hanging out with people that I've met in an internet chat room? Can't say I ever thought it would go that far, but it has. And yeah, we have a great community. We have, shockingly enough, I get it. It's weird, internet chat room. But yeah, there's a lot of normal people that hang out in an internet chat room where, I don't know, maybe we're all just freak shows. And because we're all freak shows, that's our normal. Freak is our normal. So I don't know. Maybe we're not normal. I have no idea. All I know is that I do enjoy meeting members, hanging out with them. And we've had a lot of instances where I've been able to meet up with people around the country, like I said. And speaking of meeting members, today I'm talking with somebody that I've met at one of the other meet and greets, not in Colorado, actually in Columbus, Ohio. But it's been a while since we've talked, and we kind of established a little bit of that context right at the get-go. But Mark is his name. He goes by hyprsnpr in the chat room, and he's been very active lately. He was gone for a while, and we get into kind of where he went, why he did what he did, and all that good stuff. But he has been, as of the recording of this, and I'm sure when it goes live, he's been very active in the community. So if you hang around in the chat room, hyprsnpr is what he goes by, but Mark is his first name. And we go down a lot of rabbit holes. He was telling me beforehand, I don't know, I apologize up front, I don't have much content, and I'm thinking, oh, good. You're one of these people, the people that always say, I don't have much to say. They're always the ones with all sorts of good nooks and crannies to explore, and that's exactly what we did here. A lot of good stuff going on. We talk about, I laugh because I don't want to say it. I'll just say that he could have had X amount for a loss, but it ended up at Y amount, and Y amount was a whole lot bigger than X amount, and I'll just leave it at that. But we got a lot of good stuff to talk about, and as a quick little I guess just FYI, if you did listen to episode 195, Chez's mic was a little bit off, and due to some logistical errors right now, Chez is not going to be. So here, it'll just be Mark and I, and one of those things where, when you have somebody that's willing to do the podcast, you got to take advantage of it because you never know when life can happen, and I want to respect people's schedules. So this is when Mark wanted to do it, and this is when it fit into his schedule. So here we are, but Chez is okay. We had some technical logistic difficulties, and we'll just leave it at that. But yeah, without further ado, let's have a great discussion with Mark. Mark, welcome back to the show.
Thanks, Clay. Appreciate it.
Yeah, I have to admit, though, we were just briefly talking before we got the recording started, and Mark just doesn't, I don't know. To me, you're not Mark. You're just hyprsnpr, and that's what I've come to know you by. And I know we've met in person at the Columbus meet and greet, but when was that? That's been a couple years ago, hasn't it?
I think it was May of 2016.
Yeah, that sounds right. Because let's see, my wife was pregnant with our fourth, and she's over a year old now. So it's been a while since we've met in person. And then, as I was telling you before I got recording, I actually did my homework before we started. And last episode you were on was 123, and this is episode 196. So it's been well over a year since we even talked on here. But
yeah.
it's been a while, I guess, is the moral of the story here.
Yeah, which makes kind of sense for my story. Just because I did kind of take a hiatus. As you're aware, I was engaged, newly engaged for the most part, when I did meet you in Columbus.
I do remember that. My wife talked to your fiance at the time. So
yeah, absolutely. And at that point in time, I was doing okay, but I still wasn't consistent. So I kind of put the brakes on trading around that time. Went back to paper, and for the entire, a little over a year that I was engaged, I basically didn't do and almost no live trading. It was almost all paper, and just kind of went back to learning to try to get consistent.
Okay, and that was, remind me, that when we met in Columbus, that's when you were newly engaged, and then you were engaged.
Yeah, I just got engaged in like that March.
Okay. So then literally we had met, and then you're saying that's when you essentially paper traded for the following year?
Pretty much, yeah.
Okay.
I just went live again this August, so.
This August, okay, and we're recording this in November. So, okay, cool. All right, that's good context. Remind, all I know is the account, or the title of 123 was blowing up your account and then still owing money. So I don't mean, you don't need to recap everything, because listeners can go back to episode 123 if they want. But I guess walk us through, in a nutshell, condensed version, what brought you into the markets. And then you got to tell us, I don't remember what trade or what happened to blow up your account, but walk us through that again. And then we'll pick up kind of from where we started things off. But yeah, give listeners a quick rundown from episode 123.
Yeah, sure. So basically, at a very high level, I had a good friend, still was a good friend, but at the time, his dad had made a lot of money in real estate. So he was also looking for other ways to make good money. So he took a very expensive stock option course. Essentially just taught him how to trade covered calls. So I was essentially trying to mimic what my friend and his dad were doing, and I was actually doing well for several months. But I had no business being in real money. I didn't even know I could. So basically, what ended up biting me, I bought into a company. I was holding the covered call, and I thought, since I owned the options, and I could not exit the underlying position. But essentially what happened is, I was in a company, somebody got a hot stock tip and said, oh yeah, buy this company, it's going to be, a certain level in like a month or whatever. So I was in that company, and then it came out overnight that the investors or not the investors, but the board was keeping the stock price inflated. So it essentially dropped from, I don't even remember the totals anymore, but I almost say like $16 or $17 a share to like a couple bucks. And then over the next couple days, it then dropped down to like less than $1.
And you just got...
and I wrote it all the way down.
And there's where the account went poof. Plus you still owed some more money, which for listeners out there, that's, keep that in mind with margin. You can literally lose all the money in your account, but then still owe money due to the fact that that's just kind of how margin operates. So, and that's why I always have. I'm gonna try my best to call you Mark, even though in my mind it seems like I'm talking to another person. But that's why I've always respected Mark, because he just told it like it is. Yeah, I blew up my account, and even after my account was blown up, I still owed more money. I mean, so if that's not candidness, I don't know what is. So I've always respected him for that. So thank you once again for sharing that. But yeah, that's like, I like how you used kind of a high level. That's the high level summary of his story. So yeah, 123. I'll plug that one more time. Go back and check it out. But my question here is, that kind of stood out, is we met up in Columbus, like you established, and then after that, you paper traded for basically the entire year. But what kind of shifted you back into deciding to make that very long-term decision of needing a paper trade for that period of time? Or did you go into it thinking you were only going to paper trade for like a month? I guess, what exactly was the thought process in more detail in terms of you deciding that you needed to or wanted to go back to paper?
So honestly, more than anything, it was just the expensive wedding coming up, and I didn't want to risk any potential money that I would have going to that wedding. And knowing I wasn't consistent, I knew there was a chance that I could essentially dip into money I essentially had allocated for the wedding.
Okay, no, that's sometimes all you need is a practical reason in a practical real life situation, such as a wedding, to make that obviously be the case. Now, even with that though, did you think that you would literally be trading or paper trading for the entire year? Was that always the plan, or because that's I'm not saying there was anything wrong with it, but that's a very long time, and I know you're passionate about trading things. So when you kind of factor in the context of you being passionate about trading a year, that's a super, super long time. Was that the plan, or?
That basically was the plan, just because I didn't have the confidence that I wouldn't be on the roller coaster that I was on. So I was essentially going from 1 week I'd be up a grand or two, and the next week I would have given it all back, and if not some. So I just wasn't that consistent. Or I wasn't as consistent enough as I would have liked to be. Now, I'm not going to lie, it was hard to kind of sit some things in the market out. But around that same time, a few months later, I got a new job. So that kind of helped kind of keep my mind off the market as well. Um, and I've been in that job now a little over a year. So that's down more to a routine, so it helps me trade throughout the day a little bit better. But some things happen in life that kind of help me kind of get past that and just kind of concentrate more on practicing. And I knew deep down I needed to practice more, because I just really struggled with that consistency. And honestly, it kind of came down to like every trade I was executing, I was going for that home run. Like I didn't know any different. Like in my mind, like I was always going, oh, this has got to be like, I've got to go, 500 shares, 1,000 shares, and I need like a $2 move in my favor. Like, I mean, it was ridiculous. So once I kind of got, back in the paper, I was kind of able to kind of focus on my strategies and get myself out of the habit of needing that home run trade and getting comfortable taking a small loss and that type of thing.
Okay, first off, I will agree that is pretty ridiculous. If you're sitting there, I need a $2 move. Okay, all right, yeah, that's I'm not going to sugarcoat that. I am full in agreement with yourself. That is quite that's pretty that's greedy. Would you agree that was kind of a greedy mindset?
Yeah, and I just threw out $2. It was a little bit of exaggeration for effect, but for the most part, I was being super greedy. Absolutely.
Okay, all right, fair enough. I'm okay. I'm glad that was to effect, because if that was like straight up, I'd be like, that's one of the more greedy savages mindset. But regardless, you're being greedy. Now, you threw out some terms that I mean, hopefully, if you can kind of break down. I had to get better at taking smaller losses. I had to kind of get over this super greedy mindset. You had to practice. Well, I mean, what exactly were you doing to practice? What exactly, or what did you do to, kind of to get your mind around, the smaller losses? Because for listeners out there, a little context, Mark's been posting gains and all that stuff in the chat room and all that. And yeah, you've definitely been doing very well. It's not like you're perfect, but it's not like you're posting any sort of, account blow up type things either, where that would be a result of being super greedy. So I guess try to, go through a little bit more detail about practicing. Yeah, you're paper trading, but still paper trading, that's kind of a broad perspective. So, I mean, how exactly were you going about this practice that has ultimately led to what I'm assuming is your mind frame, just being able to take those losses and not being, as greedy as you self-admittedly were?
Correct. So, I mean, it was a process. I tried several different things. The key is, I definitely in my.
Let me ask this: what did you try that did not work? Several different things. It was a process. Walk us through some things that you tried that just didn't quite work for you.
So when I first transitioned paper, I was essentially just doing exactly what I did with money, and I was just trying to go big and just be like, well, why is this not working? And so then I kind of backpedaled off of that and just tried. I tried just options. I tried just equities. I actually just tried just futures in paper. I've really found that my kind of sweet spot is equities. So like when I was doing before I took my hiatus and when I was just trading essentially with real money, I was doing a lot of options. And I found my bread and butter is not options. It's definitely the underlying equity. I will still trade options every now and then when I have a decent setup, but it's not my sole. I would say 90% of my trades are the equity and not the options.
Yeah, I was wondering because today you traded what, Tesla options, if I remember right from the
Amazon.
screenshot?
Amazon
was
yep.
Okay, but and that's been one of some of the first options you've traded in a while, or at least I feel like I haven't seen any options. And then all of a sudden I sell them, but I self-admittedly maybe I've missed some of your posting in the chat room. But
yeah,
I would agree. It seems like it's majority equity.
Yeah, I do options maybe once, twice, 3 times a week at most.
Okay, and you mentioned if you really like this setup, I mean, what kind of setup kind of has to be looking you in the face in order for you to want to take an options trade?
Essentially rubber band moves. So if it rubber bands up or down to a key real estate point, then I'll send, and then I kind of watch it, and like there's like a straight just wolf candle, or anything like that. Then I'll buy in like a contract, maybe 2. And if it starts to go against me, I've got kind of my pre-established mental stop loss. Now with options, I do a mental stop loss, and then I'll bail out. And then if it keeps going up, and then I'll try again at some point.
Okay, so with options, in my mind, that makes a lot of sense. You're doing more of the mental stop loss thing, which
Right.
kind of segues perfectly into this other question of, I mean, do you feel pretty good about taking losses now? I mean, do you still struggle with it, or is it kind of just a matter of, all right, I was wrong, get out? Or, I mean, mentally speaking, how do you feel with losses right now?
I feel pretty good about it. And I don't know how much of that is just because I have had a really good run here over the last several months. So I'm kind of, in my mind, I'm playing with the house's money. But I don't think so, because when I was in paper, I still got pretty comfortable with it. Like where basically if at any point in the past, if I had even finished the day like -$5, I was pissed because like I didn't want to see any red at all. But like the other day, I had a $500 green day, but I had $100 loss in there. So I should have been, $600 or something, but I took $100 loss on a stock because it just wasn't doing what I was needing to do. And I was completely okay with that. And that was actually one of my first trades in the morning. So I actually was down for the morning, and then I kind of traded back out of it.
Okay, I was going to actually ask that is, have you had any sort of losses that, because sometimes, you talk with somebody, and this is obviously not you, but you're talking with somebody, they're like, yeah, it's all, I just started and it's been like 2 weeks and it's all green. It's like, okay, well, that's good. I'm not saying that, this person doesn't know what they're doing, but it's not really long enough for them to have maybe experienced something where there's a flaw in the strategy. But in your case, like you said, you have had losses and none of those losses have blown things up. So that tells me that, it's not like just some random luck streak where you're just, lucking out without, even really knowing that you're lucking out. But yeah, I mean, if you've had losses and like you said, controlled losses of $100, then, that tells twofold that your strategy makes some sort of logical sense and you're mentally able to deal with just taking a loss, when you need to. So, I mean, would you say that's kind of a fair summary where you are?
Yeah,
you've
absolutely.
had losses, but none of these losses are catastrophic or anything like that?
Yeah, absolutely. Except for there was one day that was an exception, and it still wasn't catastrophic. I ended up green for the month, but I had it in my head. It was the day that Canada went legal on weed, so I had it in my damn head that there was no way the stock wasn't going up that day. So I basically ignored all my rules, everything, and I ended up that day $3,000 down. So
what stock was the CGC or something?
Yeah, pretty much. I went big. And I built a position pretty big, and I was a stubborn asshole, and I didn't get out when all my rules said I should get out, and I continued to take a bigger loss.
Do you remember what the loss would have been had you gotten out when your rules said you should have gotten out?
Oh yeah, it was like $250.
Oh man, I thought you were gonna say like 1,000 or something like. And you ended up taking a $3,000 loss?
Yeah.
Oh, man.
Because I'm an idiot.
I appreciate you sharing that because that really just encapsulates how nasty things can get. But also, and I'm not saying this for those of you out there that like to use fundamentals, or because there's no holy grail out there. So this is not my way of throwing fundamentals under the bus. But what immediately stuck out was what really caused it was not the chart. It was a fundamental analysis issue. You had a fundamental idea that had nothing based on the chart. It was just a matter of, correct me if I'm wrong, but Canada just legalized marijuana. Because they just legalized marijuana, this thing has got to go up. That's my premise going in.
Pretty much. Yes, exactly. Yep.
And because of that, because of the fundamental analysis part of it, you essentially decided to just ignore all the technical chart analysis parts of it. So like I said, I'm not saying that people shouldn't use fundamental analysis, but that kind of stuck out to me as it really wasn't a chart discipline problem. It was just, or is this normal? Do you usually bring in fundamental analysis into your decisions?
No, not normal at all. And honestly, the few times I do, it always ends up biting me. So I need that's the kind of my next area of focus is to not allow myself to do that.
Yeah, I feel you on that. And I'm pretty good now in terms of just catching and realizing. But yeah, that's why I really don't. And I'm not saying there's anything wrong with this, but something's moving. Oh, what's the news? Why is it moving? Blah, blah, blah. And for me, I don't even want to know why, because as soon as you know why, in your mind, if the why is some sort of, let's just say, negative connotation, then for me, and it sounds like for you, we can relate. It's like, well, that's bad news. So it'll eventually go down. And sometimes it just doesn't. And the biggest one that I think was the nail in the coffin for me that really just solidified this in terms of my personal preference of, I don't want to know the news. I don't want to know. I just want to know that something is getting volume. As far as why, don't care. But a couple of years ago, I don't even remember what it was, but some company was like, the IRS is investigating them for tax fraud. I don't remember, but something nasty where you would be like, oh, wow, government's getting involved. The IRS, the SEC, I don't know what it was, but it was like the worst sounding news ever. And yeah, it went down, but I could easily see people, myself included, thinking, well, this thing could be just a nasty, nasty swing trade. Like, oh my. And then like the next 2 or 3 days, the thing like just bounced and bounced and bounced. Yeah. And for anybody that would have been just sucked into the mind trap of, oh, well, that fundamental event, it's got to be negative, they would have been absolutely roasted. So I guess that's my long.
Tesla.
Oh yeah, exactly. That could be. Yeah, Tesla is a great example where, just be careful for that. Be careful with the news because. I always like to people say, oh, that was bad news. Well, bad news according to who? Because as far as I see it, the price is just going up and up and up. Where people say, oh, the earnings were good. It's like, well, if the earnings were good, why is the market just absolutely pounding it? So, I mean, you always got to be very, very careful. At the end of the day, the ultimate kind of judge is price action itself, which is technical analysis. Which is why I found your numbers fascinating, where if you would just listen to the market, aka price action, you would have lost $250, but your mind was corrupted by the general premise of bullishness, and yeah, things just didn't get bullish. But that's a great example there of, and you thought you didn't think we'd have enough content for this. That was a great piece of little content right there that actually brought up a very valuable learning point. But But even with that, you were still green on the month?
Yeah, so I was still $2,000 green on the month.
Okay, so that's a good month that you were. Or at what point in the month did that occur? Was that? Well, let's see. That was probably mid-November.
15, 16.
Or no,
that was the 17th. So that was October 17th.
Okay, all right. So right in the middle. So you took that, and then. How did you react after that? I mean, do you feel like you were revenge trading, or were you able to just get yourself back into a mindset for the remainder of that month to just
unbelievably, unbelievably, I thought so that night I thought I was going to be like kind of in the revenge trade mode the next day, but I really stayed kind of calm. I knew it was a breakdown on my part, and I was kind of beating myself up on the rules. So like the very next day, I was green $104. So if that tells you anything, I definitely was not revenge trading.
That's great, and I would say that because I do remember, I don't know, but I know maybe it was our last talk, but you've kind of had this. Did you used to revenge trade, or am I confusing you? So, okay, all right.
Absolutely. Yeah, I would go so if I would normally go in 10 contracts or something, I would go in the next day to try to get the money back. I'd be like 20 contracts, 25 contracts, like right off the bat. I wouldn't even build to it. It would be like my initial position, 20 contracts, go. Like, it was ridiculous.
I can relate, and I think a lot of listeners can probably relate. Maybe, listener, you're not quite sure is there a term for what you do, but yes, there is a term. That is called just flat out revenge trading. If normally you trade with 10, but you take a loss, then all of a sudden the next day you're at 15 or 20. Yes, emotionally, that is the revenge trade voices that it's showing up. So, okay, I thought that was you. So no, that's actually that's really good, man. That's awesome that the next day you were at 104, because that tells me you got right back into the grind and you were focused on the strategy itself and not revenge trading or anything else. And it sounds like, correct me if I'm wrong, but a good kind of little mental trick is you got over the $3,000 loss so quick was because you looked in the mirror. You were like, hey, that was totally my fault. Had I followed my rules, I would have gotten out with $250. So it's not like I don't know what happened. It's not like I have no idea what to even do. You knew what happened and you knew what to do. Is that a fair summary?
Absolutely. Yeah, 100%. It's not like I even had to dwell over it and be like, what the heck happened? I knew exactly what happened. I knew exactly when I was supposed to sell. I even remember saying to myself when I was watching it in the chart, because I had the shapes and everything drawn on the chart. I was like, well, here's where I should sell. I'm not going to sell. It'll be fine.
That's it's bad that you didn't, but it's also very, I think, very freeing, very you're not in bondage. What do I mean by bondage? Well, one of the worst things that could have happened, and that does happen to a lot of new people, is they take a loss like Mark took, and then, maybe they lie to themselves, or else they literally, I don't know what went wrong. Why did that just happen? What am I supposed to do? I mean, because at the core, they're running around like a chicken with their head cut off. But when you actually do know what you're doing, there's no guarantee that you're always going to do what you're supposed to. But this is how, and this is why Mark was able to turn things around that much quicker, because he did actually have a true strategy. He did actually have a true set of rules where he could look back and, like you said, Mark, literally say, this is where I should be selling. But at least you knew where you went wrong, where so many people don't know where they went wrong. And as a listener, and of course you got to be honest here, don't lie to yourself, but if you've been taking losses, or you just kind of, if you're just going to be honest with yourself, like, I'm really not sure why I'm not consistent, or I'm not really sure why I keep taking losses, or the reason is you just don't have a true strategy. And you can always get a true strategy, but that is why when you have confusion and you don't know exactly what's wrong, why you lost, what you're supposed to do, that's all fixable, but take that as a sign that you need to really tap the brakes on using real money, because at the core, whether or not you want to admit it, you just don't know what you're doing. And that's kind of the first step. And to kind of go back to Mark, when you decided to get back on paper trading, I mean, you really didn't know what you're doing. And it sounds like what kind of pushed you over the edge was, the practical real life event of the wedding coming up, where it's like, listen, you don't actually know what you're quite doing yet. You have a good idea, but not good enough.
Correct.
Which helped you, put on the brakes. But yeah, that's a very, very good learning point for everybody. And a good reminder for me is, when you have a true system in place, then if something goes wrong, you're going to know how to quickly correct it, or you're going to know who to blame. And it's, that person in the mirror. Drew, out of curiosity, and do you remember what the next day was? So you had $104 the following day. Do you remember what the next trading day looked like at all?
Yeah, I actually track every day, and this is actually something new that I started when I rejoined the market. So used to be my own trade, I didn't track them at all. So like, I couldn't even tell you what I did last week or 2 days ago, much less months ago. But so I've tracked everything. The very next day, so was that Friday, I did 475 green.
Okay, nice. So you started to bounce back very quickly. Now you track every single day.
Mm-hmm.
Okay, and now for me, and don't stop. It sounds like it's working, so I'm not saying this in a way that's trying to encourage you to stop. But for me, that would drive me insane. For me, it's like, I'll check like at the end of the month, if that. So in your mind, why does that help you? Again, you're not wrong. I'm just asking out of curiosity. I mean, I think it's an interesting, because if anything, it goes to show, what do you mean by personal risk tolerance? Well, here's a great example of personal risk tolerance. For whatever reason, Mark likes to know every single day. For me, I don't want to know because it throws me off, but clearly not Mark. So, I mean, how does it help you, do you think?
Right. So actually, so I think it throws me off not to track it. So I was playing mental games with myself when I was in down. I would essentially trick myself that I wasn't down as much as I actually was, and that, oh yeah, I made it all back this week, when in reality I didn't. Yeah, I was just kind of doing those mental mind games with myself.
So you found it that when you actually know where you're at relative to the numbers, it just helps you to stay more disciplined?
Yes, exactly. It helps me follow my strategies and all that stuff more closely and accurately and consistently.
Interesting. And I am the exact opposite. For me, it's like, I know that I need to follow the system. And so just as long as you follow the system and follow the strategy, the numbers should work themselves out. But that's fascinating. Yeah, we're the exact, so Mark and I were very similar. If we look at some sort of news or some sort of fundamental idea, that can really corrupt our chart vision. So we're mirror images there. But when it comes to this, we're total polar opposites. So that's good stuff. But also, this is why, listeners, anybody out there trying to force some sort of strategy down your throat, sell you some sort of system, they are lying to you, because we are all different. Now, if they're trying to sell you tools, like I sell you the tool of technical analysis. Here's how you use the tool. Here's how you need to use a tool to build a strategy for you. But this is the quote unquote for you, because as you're listening and hearing this, we're similar in some ways as traders, but we're different in other ways. And that's why you have to find a tool that where you can build and construct a system that fits into your personal risk tolerance. Now, are you above pattern day trading rule, or where do you stand in that regard?
Yeah. So when I started in August, I was not, but I am now.
Okay, nice. So sounds like you just keep rolling all the funds into your account. You don't withdraw or anything?
Absolutely. I've never withdrawn a single cent.
Okay. All right. So that's awesome. How long did it take you to get up above the pattern day trading rule?
Well, when I started in August, I was about 22-ish, maybe 22.5. So no, it didn't take too long. Okay.
Well, I mean, you pass over that nonchalantly, but a lot of people start at 22.5 and then all of a sudden they're at 12.5. So I mean, that's
well, sure.
I like to know that. I'd like to know your account is growing. That's
Well, so I'll back up then. So back when you interviewed me probably the last time, I was actually over 25 at that point. So my account had fallen, not a ton. So I think at my best then I was at like 28, 29. So I had fallen all the way back to like 22 something. Well, and I'll take that back. So a big portion of that was a company that I worked for at the time. I had quite a few shares of them. They had fell a lot too, so I took some losses there.
Okay,
so
all right.
I wasn't day trading them. I actually owned them for like years and years and years. I finally have sold that position, but
right. So that's really no your fault of your own from a trading perspective. That just happened to be
correct.
Somebody you're working for. All right, that makes sense. Now I know we've kind of already talked about this, but when you were paper trading and practicing, this, from my understanding, this wasn't like every single day over that year, right? This was it like a couple of weeks here and then a couple of weeks off, or
no, for the most part, I really enjoy the market, and so any chance I got, I would definitely paper trade. So I would say I paper traded at least 3 days a week.
Over the entire year you did then?
Yeah.
Oh, okay, all right. So then that was a lot of trading then.
Mm-hmm.
I thought that. How did you stay out of the market for that long? And I just asked because there's so many times where, people, they give you a plan through email or whatever, and then, they keep in touch with you, which is great. That's what I ask. Hey, if keep me posted on things, let me know. And then all of a sudden, wait a second, you're going real money. That's not what you were saying a month ago, right, or, 3 weeks ago. So how did you do that for a year? I realize I'm really trying to kind of maybe beat this dead horse, but that's a long time for somebody like you that has passion to just stay out of the market. Was it just straight up that wedding just looming over your head that was the ultimate kind of just authority figure? Or, I mean, how did you do that?
Yeah, no. I mean, part of it is just I'm stubborn. So whether that's good or bad, I'm not really sure. So once I do set my mind on something and I've got a certain goal that I'm trying to hit or a certain milestone I'm waiting to see, um, I'm going to do it. Like my mind's done made up. It's going to happen. Now, part of that too wasn't just the wedding. Like if I had been consistent long enough in paper, I would have jumped back into money regardless of the wedding. But my ultimate goal was kind of the be consistent by the wedding, essentially, right? And I would say I got to that consistency right around the wedding, so it kind of just worked out. And then life didn't kind of normalize again until around really the end of July, beginning of August. So that's when I made the decision to go back to real money.
Okay. Now, your goal was consistency.
Right.
That's great. But how did you numerically quantify consistency?
So basically I started tracking everything via an Excel spreadsheet, like I said, to the day. So I don't necessarily track the trades that I do that day, but I track what the overall P&L of the day. And my consistency is I really shoot for half percent to 1% of my overall account per day.
Okay. And so you're looking for 1%, but so it's not a matter of if you had a red day, then you wouldn't chalk that up to being inconsistent.
Correct.
Am I understand? Okay. So you were basically looking at essentially you wanted to see a trend slowly going upwards.
That's correct. Yes.
Okay. And I bring that up because a lot of times, so for you newer listeners out there, just because you have a losing day or just because you have a losing trade or heck, just because you maybe even have a losing week, that doesn't mean that, oh, I'm not consistent. Oh, something's wrong.
Exactly.
Now, it very well could mean something's wrong. It very well could mean that, yeah, you're just making stuff up as you go. But don't be too quick to jump into the boat of, I'm not consistent. I gotta start all over again. You got to give things a time, to play out. And you have to look at just overall trends, which is, what Mark was clearly doing. He's not looking at individual trades per se. He's looking, was it literally per day or were you looking at per week?
So I do both. So I track every day and then I get a week. I do a weekly total too. But for me, yeah. So for me, I'm really looking at it probably per week overall, as long as I have a trend going up over time.
And do you do the exact same what you're doing now as you were during paper trading?
Yes, I've get everything is the exact same except for it's real money instead of fake.
Okay, cool. That's good to know because what you don't want to do is, and I know you know this, but talking to just listeners, if you're treating things and going about things one way in paper, then all of a sudden you find yourself veering off the path in real money.
Right.
That can be pretty tricky. But I like how Mark, how you track your quote unquote consistency on paper the way you're still doing it the exact same way with real money, because even from that, the little things like that, if you all of a sudden rearrange your definition of consistency or you change a vantage point, that can really play mind games with you if you all of a sudden change how you are defining consistent. So just you got to be, I realized as a listener that maybe you've never traded, that seems to be a little dramatic. Right. A little change but I promise. Would you agree that it matters if you all of a sudden start to kind of look at how you measure consistency different all of a sudden?
Oh yeah, absolutely. It changes everything, and it messes with you psychologically, and it's just a whole new everything you have to get used to.
Yeah, it's as we've said, and we'll always say, there's only so much that we can do here without sounding like total just crazy people until you actually put your real money on the line and you meet all the voices that you have in your head that you're just not aware you have in your head. So, sometimes you just got to take our word for it. If you don't, no offense is taken. Just head to the market, put some money on the line, and you'll see what we're talking about. Now, you do have a full-time job, right?
I do, absolutely. So I'm actually in information technology for a Fortune 500 company. So, everything I do with trading is really part-time.
Okay, and with that, because a lot of people do have full-time jobs or part-time jobs, so how do you fit in trading into your into your normal day as somebody with a full-time job?
Sure. So luckily I am in information technology, so I do have the luxury of being a computer a lot. And, while I'm on a phone call or on a meeting or whatever, I can pull up my charts essentially and watch the market. I might not be able to sit there and watch it nonstop, but enough to kind of be able to set alerts and hear that alert go off and then go check something and, things like that.
And what does your routine look like? First off, let me take a step back. How would you classify yourself as a trader? Are you a short-term day trading scalper, or are you what's your ideal time frame that you'd like to hold a position for?
Seconds. So yes.
Okay, so you're a scalper then.
Absolutely.
You're a day trading scalper is how you define yourself. So as far as, narrowing things down, knowing that you're a day trader, day trading scalper, scalping day trader, whatever you want to call it, how do you prep for the day? What does your routine look like? Again, because you have the full-time job, what time do you get in the office?
Sure.
Do you do work emails first? So walk us through kind of your normal morning, combining both trading and then other work stuff that you may have going on.
Yeah, so I usually get in the office sometime between 8 a.m. and 8:30, depending on traffic, and that's Eastern time. Generally I'm doing my work stuff first, so hitting emails, checking voicemail, all that type of stuff. And then I'd say around 9 to 9:15, that's when I'm logging into your chat room. I'm checking stock twits for movers, your room alert for movers, any scanners that I might have set up, which I still don't have enough that I enjoy setting. I don't have enough set up for myself yet. I'm still working on that. So yeah, I mean, not a ton of research time goes into it, but usually right around that kind of 9 to 9:15 areas when I'm going in and just checking out what's kind of the big movers for the day.
Okay, and I want to stand up for you because I can see it right now. Your new listeners out there, you hear not much research goes into it. Wait, what?
Well, yeah.
Okay, as somebody that trades, similarly to Mark, meaning my ideal hold time is seconds. There's not much research that needs to be done other than a couple facts.
Correct.
And that fact is, where are the movers at? Where are the volume at? Where are the volatile stocks at? Why they're volatile? Again, I won't beat that dead horse. We've talked about that. We don't really care about why something is volatile. The idea here is we want volume, we want volatility. And that's pretty much the only quote-unquote research that goes into it. So yep. I realized when you're brand new, I knew when I was brand new, I was like, well, that research, that's how you're a good trader. You got to research the stocks. And okay, yeah, we do research, but again, words matter. Definitions matter in the world of the stock market. And research is going to be defined differently based on the type of trader you are, which is why I wanted Mark to quickly kind of add some context to what type of trader he looks at. So a research definition per, a day trading scalper is simply going to be kind of roll out of bed, show up. A couple weeks ago, we talked with Nate Wilson, and, same thing. He kind of just shows up in the office, has a very similar routine to Mark, does some emails, does some work stuff. Then all of a sudden kind of just, okay, where are the movers at? Where's the volume at? Where's the volatility at? And that is his quote unquote research. Whereas research for other people might be going through filings, looking at balance sheets, looking at cash flow statements. And there's nothing wrong with that stuff either. But don't think when he says he doesn't do much research as he's just like straight up throwing darts and doesn't really know what he's doing. Right. He's just researching things that aren't normal for the man. I went on a little bit of
no. Actually, that was very valuable. Like that's just something I'm glad that you explained it for others. It's just kind of ingrained in me, so I don't get.
Yeah, no, and I just because it's funny you say that, but you don't deal with new people customer service like I do on a day in and day out basis. So I just kind of, I don't say this in a cocky way, but I know how a lot of new traders think because A, I was new at one point, and B, I deal with new people all the time, so I can see how certain statements would be like, wait a second, oh, okay, that just gives me the apples and oranges. Mark said that in passing, but there's a lot that goes into it. So, I mean, how long do you think this quote-unquote research lasts for? Like 10 minutes, 15 minutes, if that?
Oh, no, usually right up until the market bell. I'm usually looking at stuff. So, I'd say at least 15 minutes, if not, 25. So.
But let me rearrange it because you're right. But you show up, like you said, you log into the chat room and all that stuff, at what you said, like around 9 or so. So, I mean, that's only 30 minutes before the market opens, but it's not like that entire 30 minutes you were out there like sweats, beads of sweat looking for
Oh, no,
movers.
not at
You're
all.
just kind of, it's more of a passive research even, right? It's just kind of like, okay,
Yep.
that thing's moving. Okay, that thing's moving. Okay, that's so it's a very laid back type of research when you're doing this type of trading where you just want volatility and volume,
Yeah.
right? It's nothing in like hardcore.
Yeah, I agree. And my favorite type of trade, and I think it's yours as well, just from what I observe, but is the fade. So, and then I start every day. If I enter into no trades, I'm okay with that. So, like, if I don't trade at all that day and I've got a P&L of zero, it doesn't bother me whatsoever. But I do like those fades in a high volatility stock. So, and kind of like you said, it's just kind of laid back. So it's because I've got my strategy. I know what the levels it needs to hit. So I know once I identify those potential setups, I know what I'm looking for. And if it doesn't kind of meet my criteria, I never take a position. If it does meet my criteria, then I've entered into position. Sometimes I do need to build, not too often. And then I have my exit strategy and I get out and hopefully, I'm green on the day, and it's been working for me so far.
Nice. Now, once again, maybe I have you confused somebody else, but you said I'm totally fine if I don't take any trades on the day. Didn't that used to really bother you, or didn't you feel like I want to be trading, I need to be trading? Did you never struggle with that?
I don't think I necessarily struggled with that. I mean, I'm probably a little to where I just felt like I had to do something. But I don't think I've ever communicated that to you. So I feel like you're probably confusing me with someone else. But that doesn't mean I didn't necessarily have a touch of that going on.
Okay, yeah. I mean, it's relatively common, so that was kind of probably a broad assumption where the odds are in my favor that maybe you did struggle with that. But I mean, maybe you did a little bit, like you said, to your own admission. But I mean, how do you quantify that? How do you justify that in your mind that, you know what? So we'll just assume that maybe you never have struggled with it, but okay, that's great. You're the perfect person to be talking to. So what is kind of the mind trick? What is going on in your upstairs that makes you totally okay, in your heart of hearts that, yeah, I don't have any trades and I'm totally fine with that? Because I still have the voices that show up. I'm like, I don't have any trades yet. What? Yeah, I want to get at it. I mean, I can control it, but still, that's definitely there. But it sounds like for you, you're just totally fine with it. So, I mean, I don't know, fill me and help me out. What's the trick? What kind of Jedi mind tricks are you playing on yourself?
Sure. So, I'm always testing new strategies and stuff, but I kind of have, a core subset of strategies that I kind of rely on. And if those setups don't occur, I've just learned that I'm basically forcing a trade, and it pretty much always works against me. And I've just learned that it's better just to not enter the trade.
I like that's simple but highly effective, where I like the logic chain. I feel like I need to force a trade, but in the past, when I have made a trade when there's no setups, that means I'm forcing it. And when I force trades, bad things happen. Therefore, I will not force trades because bad things happen.
Pretty much,
so that's good stuff. And sometimes I was just guilty of it. I was waiting for some like sort of epic answer, like, oh, well, first I do this, and then I do that, and then I think about this. But no, it's just from experience in the past, if things don't meet my criteria and I still trade it, that just means I'm breaking rules. And when rules are broken, bad things happen.
Yeah,
so,
and I would honestly say that's probably the biggest key that I've had. So when going back to paper and just the relearning, I went back to extreme basics. I tried not to do anything fancy anymore. I would say before, my average sizes, I would say my minimum size would have been like 500 shares or 5 contracts. Now I rarely trade more than 200 lot size or 2 contracts at any given time. Like that's usually my maximum that I'll do at a given time. Now I'll allow myself to build a position if I see something setting up the way I want, especially in like a fade type trade. But I don't do that too often. Or I'll trade a contract or 2. Whereas before I was doing 10, 20 without even batting an eye at it. And I won't let myself do much more than that. You might be on mute, Clay.
I am on mute. See, I love talking with IT guys. I was on mute, so that Listeners, I apologize for the awkward silence. That was just me being an idiot and talking to myself. But Mark, you bailed me out within like 2 seconds, so I appreciate that. Good old IT guys. Yes, I was on mute. Now, you mentioned extreme basics, and I get it. It sounds like you lowered your position size, which is always good. But what else? How else do you define extreme basic? You said I just wanted to go back to the extreme basics. Are you talking about, did you go back like through the courses and just study basic stuff? Or,
yes, yeah. So I definitely retook robotic trading. I just look for simple rubber band plays, ascending triangles, descending triangles. I just go back to the drawing basic shapes on the chart and looking for those breaks of patterns. And literally, that's my whole strategy anymore. Whereas I used to try to get fancy.
Yeah.
So,
and you've been on some of the recent live webinars, right? Yeah. So, that's kind of been the theme quite often is, listen, this does not need to be super complicated. It's amazing how far the basics can actually take you, assuming, of course, the basics. And to listeners out there, well, I know what a candlestick is. I know what a moving average is. I know the basics. I'm ready to trade. No, there's more to it than that, but the basics, once you truly know the basics and truly know is, that's where it gets a little, you got to be careful there. But would you agree, Mark? Once you truly, quote unquote, know the basics, just stick with the basics,
Absolutely.
Right? You don't have to get too fancy.
Exactly right. The basics so far have been serving me quite well. Doesn't mean I might not grow and adopt some new strategies as time progresses, but right now I'm just looking for, consistent green year, and then I might kind of drift out from what I'm calling the basics a little more. But though this will probably always be kind of my go-to trading style.
Now, why drift out?
Very true. So, from my logic,
I'm not saying you shouldn't. I'm just thinking out loud here, because right now I hear somebody that's successful,
right,
and now all of a sudden they're maybe drifting out. And I'm not saying you're wrong. I'm just one of those, if it ain't broke, why are you looking to fix it type things.
So the only reason I say that is essentially more tools for the tool belt. So kind of like I said, if I see a day where my strategies aren't setting up the way that I like and I don't enter in trade, if I have a few more strategies to pull from, then I'll have even less days that I don't even enter in a trade and more potential for green, correct? So that's kind of my mindset of it. But yeah, you're exactly right. I'm usually a fan of don't fix what's not broke.
And I get the theory there. I fully understand it. It's logical. And IT guys, you got to be logical. Is more strategies, more opportunity. I get it. But just something to be aware of is the more you spread yourself thin, what is it? A master, jack of all trades, a master of none. There we go. You want to be a master of a couple things. And a great way to dilute become a master is, well, you keep adding more tools to the tool belt. So I'm not saying you're necessarily wrong. I'm just something to be aware of is you don't want to make sure that all of a sudden your tool belt's so heavy that, okay, now how do I quite use, I used to be really good at using this hammer. I used to be a master, but because I've added this, that, and the other, now I'm kind of just average with this hammer. And then all of a sudden you kind of dilute out all your skill sets for everything else. So just something to be aware of. You don't want to add too many tool belts or too many tools to the belt, because yes, I get it. But the market's tricky that way. The market, because logically, like you said, the more tools, the more opportunity. But then all of a sudden, you can catch yourself not being so good at your bread and butter.
That's true.
Your bread and butter becomes like, I don't know, like just butter or just bread, and then all of a sudden it's got mold on it. So just be careful with that. But what do you think if you could kind of pinpoint or point a finger at, and I realize I'm maybe pigeonholing you here, but if I said, Mark, if you had to point to one thing that you would attribute to the current solid success that you're on, and I care about your gains, but what I really like to hear about is you've taken losses, but minus the $3,000 loss, but even from there, you bounce back very nicely. But your losses, you seem to really have a good, solid control on your losses. So that's kind of what I'm mainly defining as success here is control over losses, not necessarily wins, because wins can wins happen randomly.
Correct.
So, what do you think is that leading force in regards to just having you keep losses, controlled and being successful in that regard?
Well, probably one, fear, just from based on past trades and just knowing how trades can turn against me. But more so just
No. That's it. That's good. Fear. I like that, because fear is a great motivator. And as you know, in the live webinar, sometimes I'll pick examples, and I admit I'm trying to teach through fear right now, because this is what can happen. And your fear is coming from past experiences, because you know what can happen,
exactly,
right?
Yeah.
Yeah. And for you listeners out there, listen to what Mark, I will confirm, bad things can indeed happen. And, this is not him maybe it is him trying to scare. I'm trying to scare you right now. Fear is a great motivator. So, and sometimes that's all it needs to be. And I fully believe that fear, that's what's keeping me on track right now, because I know what can go wrong. And that might even be a good title for this podcast right here. One word, fear. Maybe that's what we'll name this, because absolutely, that's a great answer, because fear, that's what motivates me a lot. I mean, if you pigeonholed me, I don't know. I would definitely consider fear being an answer, because I know what can happen in bad senses, but I like that answer a lot. So yeah, for you listeners out there, it's much cheaper to learn from other people's mistakes. So respect the market. Is that a fair way to kind of summarize where your fear comes from?
Oh yeah, absolutely. Just because I've had so many things just snowball on me and just get out of control in the past, and I just don't want that to happen.
Yeah, and it can happen, and it will happen if you allow it, like you allowed it on CGC.
Yeah, I absolutely didn't allow that one. I fully own it.
Should have been 250 and 3,000. Goodness. But like I said, you fought back and you still had a green month, which was great. You didn't revenge trade. So I mean, there's little nooks and crannies there where that was some good stuff. And come on, Mark, I don't think we're gonna have enough content. We're almost going on an hour here. So I mean, we had plenty of content, and I feel like we could keep talking more. Is there anything else that you wanted to address or that you want to throw out there? Or are you feeling good?
No, I mean, I think I'm feeling good, and I think my strategy is working. The only thing I do want to make sure is that it just stands the test of time, because honestly, since August, and it really started around October, but the market's basically been bearish. So I want to make sure that my strategies also work in a bull market. But I mean, there's really no reason that they shouldn't. They did on paper, but again, it is different when you're on real money. But I feel good about where I'm at trading right now, which is kind of like a first for me. So I'm actually on the right trajectory. I've had positive months. Of the 14 weeks I've been trading, I've only had 5 red days. Everything else has been green. My last red day was the October 17th. I've been green every day since. So everything seems to be heading in the right direction. So I just want to keep it there.
Okay. Well, first off, can I offer you up a little suggestion or warning?
Yeah, sure.
If not, okay. You mentioned that the markets right now have been bearish, which is true, but because I used to do this too. But be very careful, because what you're doing is you're setting up some sort of fundamental thought process and narrative that, well, the markets are bearish. So the last thing I would want to see something to happen is you breaking rules in the spirit of, well, the markets are currently bearish, so it'll eventually go on my way. Whereas if you just wipe out, like, bull market, bear market, I don't care. Who cares? Don't even pay attention to that, because for me, it's kind of like those news events. You can, that can creep in and seep down, and all of a sudden you're breaking rules because in your mind, from a high level sense, well, we're currently in a bear market or we're currently in a bull market. So because of that, and then all of a sudden you're breaking rules. Does that make sense?
Yeah, no, it makes total sense. And I guess the only reason I really even bring that up is just because I am very much geared towards the bear side on any given trade. I do like to short. So I have been doing a lot of shorts. So I just want to make sure that, I see exactly what you're saying, but just when it switches the bull, I just need to make sure I'm able to switch my mindset back to longs and not stay on that.
Well, just remember, in a bull, all that means is you're probably just fading more overextended moves to the upside. Yeah. So I mean that's what I'm saying is you're doing a strategy. It sounds somewhat similar to mine in some ways, and with that strategy, you need to have a high win rate. So and you clearly have a high win rate. So you're doing it the right way, but you are controlling losses, which is good. So, I mean, really, it's not a matter of bull market or bear market that's going to get you. You are going to get you. I mean, that's how, because you clearly have a strategy that works. There's no doubt about that. If you didn't, you would have already, there would be complications that would have shown up for the amount of time you've been trading. And the one complication that did show up, exactly what happened with it. So that was just you being an idiot, which I think we can both agree to.
I was a complete idiot. No, don't get me wrong.
Yeah, so that was not a strategy's problem. That was strategy operator's problem. Because like you said, the strategy would have had you out at 250, which would you agree you could have fought back from that relatively quickly, like in a matter of a few days?
A few days. No, I would have had that back in a trade or two. So.
Right. So exactly. So it's not, the only big downfall you had was straight up operator error, not the machine itself. But I would say don't get hung up on bullish, bearish, any of that stuff. Get hung up on you and the guy in the mirror. As long as you don't let moron Mark come out, then you'll be good to go. Just like I don't want moron Clay to come out either.
It's very true.
We all have moron in us. Would you agree with that statement?
Yeah, some less than others. Definitely, I don't see moron Clay come out very much. But compared to moron Mark, Clay, he comes out a lot.
Well, moron Clay, he's in there, and he's always in there. I may just know how to control moron Clay a little bit better than you control moron Mark, but it sounds like moron Mark is getting more and more under control as it goes. So just fear. I guess for you, focus on fear. Maybe that'll be the title of this podcast. Focus on fear, because I love. What do you think the secret is? Fear. There you go. That's as simple as that. But Mark, thank you, Hypersniper. I got to at least call you that. And that's from your gaming days, right? Or do you still game?
Well, I still have an Xbox 360, but it literally has not been powered on in forever. So I don't really game anymore.
Yeah, because you're spending your time learning how to do the markets, which is a much better game.
Oh, I agree. Yeah.
But remember, listeners, there's no reset button. So it's a game, but it's not a game. You can't just reset and all of a sudden get your money back. So maybe that was a bad analogy. But Mark, thank you for hanging out. Will you promise me one thing here? Let's not wait as long as we did before we have you back again.
Sure, yeah. Just whenever you guys need somebody, reach out to me. I'll be happy to do it.
All right, perfect. Well, Mark, thank you very much for hanging out.
Yeah, thanks, Clay. Appreciate it.
For you listeners, before you go, a final few things. First off, if you're listening on YouTube, make sure to check out the rest of the channel. There's live trade videos, there's vlog, there's quick tip videos. So a lot of different types of videos other than just these podcasts. So check them out, and hopefully you decide to ultimately subscribe to the channel as a whole. If you are listening on iTunes or any of the other podcast players, then make sure to click that like button and subscribe to the channel, especially on iTunes. If you could leave us a rating, that goes a long way and really helps us out, and we would appreciate it. And then finally, if you're listening on claytrader.com on the show notes page, click that share button. And also, if you want to ask questions, offer suggestions, or what have you, there is a comment section down below where you can click on that, and we will. We do pride ourselves on being interactive, so we will reply back to you. Again, thank you to Mark. Thank you to the listeners. We will see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.